be clear, though, what they did say was that they reaffirmed a commitment to meeting their 5% growth target. That might sound like nothing to people living from overseas, but it does mean the government's going to hit that politically sensitive target at all costs, and that means that at the very least they will continue to support the economy. And remember, the 5% growth target for China is obviously slower than double digits a decade ago, but it's 5% on a much bigger base than it was a decade ago as well. So it's not nothing.
And in reality, I guess from a political standpoint, maybe from an economic standpoint, in reality, what can President Xi Jinping do in terms of fiscal stimulus?
Well, they have room, certainly room to borrow and spend at the central government level. Now, when you get into the local governments and the provinces, that's where a lot of the property stress is located. That's where the business model of selling land off to developers to raise finances, that seems to be broken at the moment. So that's where your debt pile is. But the central government has a lot of fiscal space, to use the jargon. They could intervene. They could start shoring up projects or recapitalizing the banks, which have noted that in recent weeks, or make sure that they get those property construction sites finished. So there's a lot they could do. There's a feeling, though, that they're still being cautious because of the legacy of debt and leverage that was left by previous rounds of China's stimulus, and not just the financial crisis, but also over the last decade or so. They don't want to go down that road again. And also there's a view that maybe they're holding their powder somewhat dry. They want to get past the US election and see what comes out of that, because that could also be material for China.
So to that point, the market reaction was quite swift. So the way you're talking about it is like, look, they're long-term strategic. They don't want to make any mistakes. They want to kind of see how the election pans out. Golden Dragon Index is down. Commodities are getting hit really hard. Paul was pointing out Alibaba's down by about 8%. That's a proxy for the China consumer. Is that market reaction legit? Like, does it measure up with what we actually heard in your experience in understanding Chinese economic policy?
Well, typically the top policymakers in China, markets are not necessarily their number one concern. That's a rough rule of thumb. But I think what happened over the past couple of weeks was China's economy had reached such a kind of a funk that when the officials came out with the measures that they did, which is bring down borrowing costs, talking about putting money back into the banks, the measures they announced before the Chinese break, it heightened expectations that more money might be on the way, real fiscal spending, and that's when the markets went off in a tear. And now we've reached a point where, wait a minute, what exactly are they saying here? They're obviously putting support into the economy. They obviously want to hit that 5% growth target. That's a political target. But are they going to actually go out and borrow and spend more money, like real new money? We're not there yet. They may yet do. That announcement might yet be coming, but that's not the signal for now. I think that's where both the disappointment and the confusion has come into the market side of things. China's clearly not planning to rev things up the way they have in previous downturns. They're going to take their time working their way out of this.
And just real quickly, for me, it's the long-term issues with their population aging. I mean, some of those issues are just long-standing. I don't know how you get around those things.
Yeah, no, absolutely right. I mean, I should have mentioned the structural issues. You've got the demographics. You've got the long-term debt story. You've got the system of political control, which some people will argue will ultimately keep a cap on China's economic potential. That's a point of debate, but it's one of the structural challenges that people talk about, all of which is weighing on China's growth. So there's a view out there that over the past 4 decades, the low-hanging fruit was picked. China had a manufacturing export model. It was gangbusters. It all went well. Throw in a property boom to finish it off. But now we're at a point where, of course, making those gains so much harder, aging workforce, a lot of debt, and geopolitical tensions. It means the China story is going to be much more complicated in the years ahead.